Hello everyone, and welcome to Economic Insights with Audrey Whittington and Danielle Hale, Chief Economist of Realtor.com. Today we're going to be live reaction to the Fed's announcement, right?
Yes.
So what's the news?
So the Fed just concluded their March meeting. They do these meetings about 8 times a year, so this is the second one we've had this year so far. Actually, no, take that back. Third. Anyway.
It's hard to keep track.
Yes, exactly. Second one, I'm sorry. So January and March now. And they did not raise rates today.
Yay!
So yeah, yay. Depending on your perspective, if you're a saver, it means your interest rate at the bank is probably not going to go up.
Right.
So that might not be yay.
That's
But
true.
if you're a borrower looking to buy a home with the mortgage rate, probably looking at steady, maybe even rates that could decline a little bit further. So.
Okay, good. So, and I noticed he used the word patient a lot. That
Yes.
seems to be kind of the key economic word right now.
Yes, absolutely. So the Fed raised rates in December, and the market responded in a way that
Not very happily.
Not very happily. So it really wasn't sure that that was the right decision, and
Okay.
it communicated that by reacting.
Right.
And the Fed heard that reaction, and so they first issued the word patient in the policy statement in January, which everyone took to mean that was a sign that they probably weren't going to raise rates in March. And in the press conference following the statement today, so the word patient is still in the statement,
Right.
and Chairman Powell used the word patient several times when talking about
I think I counted
the
at least
outlook.
3.
Oh, I'm sure at least 3. And what he means is that, and he said this several times in his press conference as well, the economy's in a good place. They think the current policy stance is appropriate, so
Okay,
they've got rates at the right level to keep the economy growing at a healthy pace with full employment and low inflation. Overall conditions are good. We're doing the right thing, so we're just going to be patient and wait for the data to tell us it's time to do something different.
Okay.
So for right now, it's working.
So that's really probably very good for the markets. Now we have some questions that have been submitted. So let's take some of those questions. So for instance, one of them is, well, this is great because we're in housing. What does what the Fed said mean for home buyers and sellers? So, if you want to buy a house or sell a house, what does it mean for you?
Yeah, so in addition to the policy statement, the Fed released their economic projections. So probably good to think about both of those things in context.
Yeah.
So they expect growth to slow a bit in 2019.
Okay.
But they expect the economy to still grow, unemployment to still stay low.
Right, because it's at record lows.
Yes, or very close to record lows, yeah.
Yeah.
So both of those things are good for home buyers and the economy in general. The economy is growing, people have jobs, incomes are growing.
Rates are stable.
Right, yeah, that's definitely going to be a helpful thing. The stable rates, which will probably continue to be stable after today's announcement, may even go a little bit lower. That's going to make life a little bit easier for spring home shoppers this year.
Right, so if you're in the real estate industry, the spring market should be strong, really.
Yeah, certainly much stronger than we expected when we did our forecast back in November, when we thought this was before the Fed used the word patient, so we thought they were going to be a little more aggressive in raising rates. Something else that was interesting that came out of their projections, they do projections of the economy, the unemployment rate. They also do projections of the Fed funds rate,
okay.
which is not a guarantee. That's just their expectations based on the data that they have today. Obviously, if the future changes, which it sometimes does, those projections can change. And based on those projections, they may not increase rates at all this year.
Wow. So I actually think that would be great for 2019. So let's take another question. Another question is really, you just answered it, no change in Fed rates. That's good or encouraging. Obviously, it is good or encouraging. But certainly the Fed alluded to the fact that the market is slowing a bit and there are things that they are watching out for.
Yeah, absolutely. It depends on your perspective. They did mention some reasons for the slowing growth. One is slower growth abroad, particularly in China and in Europe. There's also the risk that events like Brexit could cause the economy to come off the rails a bit and cause growth to slow even further.
Because I think the European economy is down a bit, right? So, we're certainly a global world and affected by, those economies.
Yeah, absolutely. But, as of now, nothing is set in stone. There's still negotiations ongoing. Most people believe that ultimately some favorable solution will be worked out, so it won't have a big negative effect on growth, but they're watching it to see what happens.
Okay, good question, and I think this is a question I would ask myself, because I do love the market. So is Wall Street happy about today's announcement? Is the market way up immediately? Did it anticipate rates being flat?
So
what's it doing?
So let's check. So it's actually changed since we started talking. So
Oh my goodness,
I don't know if we did this. But You know, the market was down a little bit at the start of the day. It went up immediately following the announcement about no change in rates. And since that time, it's actually come back down. So it's
Oh no.
it's still above where it was earlier in the day, but essentially unchanged on the day. It's really not a big change.
Right.
So I think that suggests that the market is taking time to digest the reaction. The simple reaction to no rate hike is good.
Right.
But then reading into the projections and where the Fed sees the economy going, maybe it's not quite as exuberant as it would be if rates were unchanged and the economy was expected to grow at the same pace as before.
But I think the market expected this anyway, right? So
Oh,
I mean,
yeah.
if they really thought if the rates were going to go up, the market really would have dropped.
Oh yeah, that's right. In fact, you know, when I'm talking about changes, I'm talking about neither one of these changes is more than 1%. So
Yeah,
we're
right.
talking about minor moves in the market.
Okay, cool. And so the announcement, will it affect the way companies viewed, like, this is another question, job growth and unemployment? So large companies that really do track the Fed, I mean, they're really tied to the Fed. How does it affect sort of whether they're hiring, et cetera?
Yeah, so it shouldn't affect their outlooks in a huge way. I mean, the chairman reiterated several times he believes the economy is in a good place. He believes that policy is appropriate. The fact that rates are going to be roughly stable should be good for firms who want to borrow and invest. So those are all positives. You know, the recent jobs data has sent some mixed signals. January was a huge, strong number. February was a pretty terrible number.
Right.
And the chairman talked about that today. You know, on average, if you take those two numbers together, it shows some slowing in job growth relative to last year, but still plenty of job growth to keep newcomers to the jobs market employed and keep the unemployment rate at a healthy level, or actually even better than healthy level, which is where we are right now. So.
And I noticed you mentioned the retail. This is not in the questions, but I noticed you mentioned the retail markets as well. So, like, you know, how strongly the Fed watches the retail markets.
Yeah, they're really trying to take a barometer on everything that's going on in the economy. So retail sales in December were a bit weak.
Yep.
They rebounded in January.
Which was amazing.
Data is sometimes noisy, and so, and the Fed acknowledges this, like he said, with, you know, you sort of average out the job growth numbers for January and February, you don't want to react too strongly to any 1 month of data. You want to make sure that you're reacting to something that is like a real persistent trend and not just something noisy in the data.
Okay, so let's bring it back to housing, since that's what we love most, right?
Yeah.
So is it a good time to sell your home? I mean, that's one of the questions we got here is, does this announcement affect that?
Does it affect when you should sell your home? That is an excellent question. So the fact that mortgage rates are going to stay a little bit lower, it's probably going to be great for buyers in the market this year. And that's good news for sellers, because that means you have someone to sell your home to. And it's certainly going to help on the affordability side, which might help. You know, we've seen price growth slow a bit.
Yeah.
And it might help keep
And I know you said inventory's up a bit, you know.
Yeah, it might help keep some momentum in that price growth because lower mortgage rates means buyers can afford a little bit more house.
I also think they're just less skittish, right? So is stability really in its own way encourages growth. People aren't panicked over, you know, rising rates.
Yeah, and especially when you have you know, no change, it makes it easier to shop because you don't have to constantly think about how changes are going to impact your budget and your ultimate decision of whether or not to purchase. So I think on the whole this is going to be a positive thing for the market. And as far as affecting when you should sell your home, if you want to know the best time to sell your home, we've talked about that.
Yes, actually there are other videos on that. And on that note, I will say thank you for joining us. We really appreciate it. And if you enjoyed this video, there are other Economic Insight videos with Audrey Whittington and Danielle Hale.